Welcome once again, everybody. Kevin and Rick here at PaperStack, and we're wrapping up our review of the mid-year report and giving you some insight to the insightful numbers that came as a result of that. But we also have some industry insiders here that gave us some of their thoughts about the marketplace. First one we got over there is Tracy Rui. Many of you are familiar with Tracy. I met her years ago, back when she was still with Metropolitan, one of the biggest buyers in the whole industry, one of the innovators of the industry back then. And she's quoted here saying, note investors rely upon ITV, LTV, and percentage of UPV, all of which we talked about on these videos, and yield as the four cornerstones of note pricing calculations. The mid-year stats are similar to what we are seeing at Notes Direct and are reflective of the market with good balance in supply and demand. So what are your thoughts on that?
Yeah, it's good to see that it's across multiple platforms. You know, Note Direct they're a trusted counterparty. We've done business with them in the past, purchased assets off of their it's just different platform. But it's good to see that the numbers are consistent. I think it's indicative that it's not just something that's sort of siloed off in the PaperStack world, but we're seeing it on other platforms, which is indicative of the market. Which is encouraging and it should be encouraging for people who are looking to invest in the note space. Say, look, I can actually, this is not something that the market is strong right now. It's a great time to come into it.
Yeah, so a little confirmation on that. Their numbers seem to be similar, and I know they're even selling some assets on the PaperStack platform as well. Then we've got Dickie Baldwin, and Dickie with Baldwin Advisory Group. If you're not familiar, please check out his company as well. Dickie's quoted there saying, I was surprised that the percentages on your market report were so good. I agree with him. There aren't too many parts of the country where property values haven't been on the upswing, which of course is a plus.
Yeah, definitely. And if there's somebody out there, Dickie Baldwin, he's sort of got his the all-encompassing due diligence shop right now that he's running, and he sees the values. He sees the reports that are coming through his desk. So that's a great barometer to have him talk about that. See, and the numbers are good. They are. Sometimes we didn't even realize how good the numbers are until we stopped, analyzed them, started to measure them, hold up the things, say, wow, these are really impressive numbers. So it is. I'd say it's, again, the market is strong and there's still a lot of opportunity out there.
Yeah, there really is. Even with property values going up, we make money in this business. Property values go down, we make money in this business. So it's really in the right place to be, because again, the paper industry is the finance side of it. So the financial side can adapt easier than the bricks and sticks, and it just makes a lot of sense in markets that have these swings. And Dickie does know the market. I can't remember how many thousands of BPOs he's already ordered this year. So he sees prices. He knows what's going on there, all of which is good for performing and non-performing, especially at the ratios that we talked about in the earlier videos. So once again, if you haven't seen the earlier videos, please go through them. Let us talk you through what these numbers mean. I think you'll be impressed as well. Got Christopher over here at 7E Investments. Note asset pricing continues to creep up, but based on the data, there are still double digits returns to be made. Recent sales showing performing notes yielding 13% to buyers, non-performing first selling at 55% of UTB, have been the norm for the past few years, and we believe these prices will continue to rise and compress returns. Interesting take. What are your thoughts?
It is interesting take. It's great. We did send him over the yields on there at 13%. That speaks volumes as to what you can achieve by playing in the note space. I would say, I think we're going to hold steady a little bit. I think right now it'll be interesting to see, but I think that a lot of times people are out there shouting from the rooftops, the prices are high, the prices are high. And then you look at it and you're like, well, the prices are actually pretty good. Yeah. It'll be interesting to see how that changes. And I certainly think with the volatility in the market, you could have a few more people flooding the market, which may tick up a little bit. But I think ultimately eventually there's a recession coming, and that's just going to drive the prices on the platforms down. Your thoughts?
Yeah, the market will constrict, it will expand, and we've already seen that in note pricings. And the only thing I would look at a little bit different here is I think the industry tightened up, prices were up, And I think they've dropped down a little bit in the note side of the business, because again, that supply and such, it changes so much. And that's why it's hard really to do a big projection. You don't know how many billions of dollars worth, tens of thousands of notes that Fannie Mae, Freddie Mac, or some of the banks will sell at any given month. And those can be big swings. And then all of a sudden you have this big flood of inventory here. So I think we're going to steady as well, because there is this pent up amount of notes that are going through this so-called reperforming phase with some of the big buyers. And once that gets released out to the market, I think you're going to see that the prices are going to stay about the same. So I'm not really seeing prices and yields changing that much, especially what we've seen on the activity on the site there. But either way, please understand 10% returns, 9% returns, 8% returns are solid returns when you have safety and everything built in. So even if our numbers were to change a little bit, and that would be a drastic change if it went from 13 to 8. I'm sure Christopher's not talking about that much of a change, but even if it did, I mean, we're in a great position with the again, the safety of the UPBs and such that we have there. All right, Brett Palumbo over here at Distress Pro. I'm surprised to see how close the strike prices are in first as compared to seconds. That number either communicates that the assets on your platform are especially good, or that investors are taking a disproportionate risk for the same relative returns.
I kind of look at it and say, I think we have some really good assets on there. Looking at, when you kind of couple the numbers in there of the strike prices of the performing first, you're always kind of looking at, well, what is it secured by? Same thing on the second. If you're looking at the strike price, you say, well, what is the investment to value really there? And I think you can't look at one without looking at the other. But I will say, I think we're seeing pretty good pricing, or pretty good assets coming through the platform.
Mm-hmm. And I've got an interesting take on this, and maybe you've thought of this, maybe you haven't, but PaperStack's uniquely positioned within the industry as well, because so many people in the industry and really evolved as investors through the industry. So a lot of people are attracted to that. And I think there's enough people that got started around the same time that you did that got really good deals. They built them up. They've made some cash flow on that, and they're starting to move their portfolios around. They're starting to, maybe I'll sell some of these and redeploy capital over here and move around. Have you thought about that? Do you think that's a role that's more specific to PaperStack?
Yeah, absolutely. Again, we've been in, 8 years, something like that. And we did deploy a large bulk of the capital early on and have been able to enjoy those cash flows. And there's still we've also enjoyed the upswing in the market. And, people are selling for different reasons. We're winding down one fund because we have another fund that
right.
the Regulation A Plus, the MWM fund that we spoke about earlier. So people are able to put out these assets at what others might look at as like, there must be a high risk asset. It's like, no, actually it's not. All the numbers.
Just we've made money on it and we want to sell it, and we're going to price it so somebody's attracted to buy it now, not 3 months or something.
People are rebalancing their portfolios. There's a lot of different reasons people are selling. And one of the mistakes that you kind of see some new people go is like, well, why are you selling this? What are you trying to hide? What are you trying to cover up or anything like that? And certainly do your due diligence, but don't, I look at it as a lot of the assets we're selling right now are prime assets. It's just we're winding down a fund, and it's not my choice. It's what's in the paperwork. We got to liquidate by a certain time, and so you got to liquidate by a certain time. You got to sell it.
Yeah, and there is a cycle within the cycles, which is around 5 years. As you know, most of the funds that are set up in this industry are for 5 years. So you go through these 5-year cycles where all of a sudden they do have to liquidate these funds, and there's a deadline. I mean, you have to liquidate them within a certain period of time with all the reasonable effort that you can, and that certainly can affect the overall pricing. And I think that's unique to PaperStack, where people know that there's people coming here, they're active investors that are looking for deals, and if you want to sell them, price them, and they'll be sold. So good take on that as well. So that's our complete review of that overall report. But I did want to point out something else for you. While you're looking at the mid-year report, go ahead and click just below that on the new features. And we'll continue to add new features that are released on the trading platform for you. All these new services. We highlighted some of the ones already in another video, which was the escrow, the ability to have the funds escrowed, not sent directly to the seller, the audited of the collateral files, and of course the syncing up with the self-directed IRA accounts, making that a much more simple process there. And many of you, I'm sure, tell us more about that fund. You're just coding over that, and we have a lot more coming on the fund. But as we said in other videos, mwmfund.com is the website for that. Read the offering circular, go through this. We'll have plenty of time for conversations on that fund, and this enables all investors to invest in a portfolio of notes that can be managed and run properly for you. So thanks for watching this video series, and we've got many more videos on the way, right?
Yes, sir. Love jumping on with you, Kevin.
Great. Thanks, everybody.